afternoon and good evening. You are watching the Paris Fintech Forum Community video interview series. I'm Elliott Gotkine, and today I'm joined by the co-founder and CEO of Jifiti, Yaacov Martin. Great to have you with us.
Great to be here. Thank you for having me.
And I realise I've just started off by mispronouncing your company's name, Jifiti. All right, so look, before we get cracking, that wasn't going to be one of my questions about the company, but before we get cracking, we are going to learn a little bit more about Jifiti. So I was racking my brains as to where I'd heard of Jifiti, and then I realised I actually once used your gifting platform, which I think is kind of, how you started off in life. I know that's only part of the story, so why don't you kind of tell us about the company today, where you came from, and perhaps a little bit about where you're heading?
Sure. So I'll try to answer that in the order that you have just laid it out in. Today, the vast majority of our activity is actually in the world of embedded finance. We work with financial institutions and banks on the one side, and then often either merchants or service providers on the other side. And what we allow for is the financial products of these banks and financial institutions to be served at the point of need. So once upon a time, point of sale financing was definitely the most classic way to describe what I am trying to describe in a broader way. And today we find ourselves very much engaged in building out those pipes that allow banks to reach outside of the four walls of the bank and offer their products, primarily lending products, in many, many different contexts and many different ecosystems to a varied audience. You could be a consumer, a small business owner, a medium business owner, and the right type of financial product needs to meet the demand when and where it matters most. That is what we busy ourselves with. But you are absolutely right. We did not start off in this space. We actually discovered this space from a very seemingly different industry, and that is the world of gifting and gift cards. We had various solutions for merchants when it came to giving gifts and giving the digital ability to send gifts or gift cards from stores. And what we ran into very early on were various types of challenges around integration at point of sale. And we had to first figure out the infrastructure in order to then retrofit our various solutions on top of that infrastructure. That's how we discovered this whole world of payment rails and so on. We applied some interesting solutions, built gifting products, one of which apparently you used on top of that infrastructure. Within a few years, we developed that business to I would call it a medium-sized business, but realized that we could use much of our know-how on the infrastructure level to solve a apparently burning need for some of our then existing clients in the world of finance. And that is how we got to where we are.
And in terms of, the lending products, I mean, right now in 2026, we are seeing, as a result of, let's call them geopolitical tensions, shall we? As a result of what's going on in the world, that, there's a danger that inflation is going back up again. That normally leads to higher interest rates. Is that something that you are seeing already that could actually impact the business, that will reduce the demand for your product?
So this is super interesting because I think that the geopolitical situation, together with some of the changes that are taking place in the entire financial world over the last decade or two, are really all hitting this boiling point, if you will. And some of those other movements that we have noted, and I'm sure everyone else has as well, is that there are extremely, extremely strong players who are not coming from the traditional banking world in the shape and form of fintech. So yes, we speak about ourselves as a fintech, but we are fintech only from the perspective of providing various types of software and technology solutions in the world of finance. When we refer to fintechs who are actually competing with traditional financial institutions, we're speaking about those fintechs who are actually offering various products of their own from their own balance sheet or balance sheets that they raise for this purpose. And the reason that this ties into your comment is because What we have identified in traditional banks is actually that they have certain advantages. And those are usually their cost of capital. Their cost of capital is still lower than those of what I call the fintechs who need to raise those funds on the market and satisfy all sorts of stakeholders. Number two is these banks and financial institutions are regulated and actually with time become more and more regulated, which means that they are often more, I would say, scrutinized when it comes to offering financial products to consumers primarily, and therefore their interest rates and other types of fees and fines are capped and regulated. And that becomes extremely important in an environment that you mentioned before. When interest rates are on the rise, we want to make sure that consumers, but also small businesses, have access to the best type of financial solution that there is for them when they are considering a particular transaction. And that is where we find ourselves to be quite critical in this environment.
Okay. And now you're based in Israel. I'm just wondering where your service is available, because I think I used Jifiti when I was based out there for my journalism. And where are you seeing the most growth coming from?
Sure. So yes, we are based in Israel. However, we have no business in Israel other than, of course, the activity of developing the solutions and various aspects of the operation. So today we operate in 10 different markets. This includes North America, Canada, the US, and then the UK, France, Belgium, Spain, Italy, Finland.
You're going to miss one out.
I may be missing one or two, but I think you get the idea. This, too, was actually an interesting story. Most firms and companies in our space usually limit themselves geographically, and for very good reason. We operate in like I mentioned before, a heavily regulated environment. And that means that your architecture and various elements of the platform have to conform with these ever-changing legislative kind of or legal frameworks and compliance requirements. And I remember having quite an animated discussion at the board level as to whether we should venture out from North America, where we started, to Central and Western Europe. And basically the feedback I was getting was that is an incredible headache. And they were right. It is a headache. And when you look around, you don't see many doing that. That, of course, was, I guess, the Israeli side of ours. Okay, well, if it's impossible, that's why we want to do it. And we ended up going on a long journey of figuring out exactly what type of architecture is needed, what type of considerations we have to take into account when we build out these solutions, and especially with a broad array of solutions. But that is where we are today.
Okay, so we've heard about Jifiti. Let's now learn more about Yaacov. So I think you spent more than a decade building Jifiti. If I'm not, it's like 15 years old, is it? Something like that?
Almost.
I mean, what keeps you motivated? I mean, and I appreciate for some it might be, okay, finally one day we're going to sell this thing, we're going to IPO this thing, or is it just you just really just love running this company and you just want to do it for the rest of your life?
Excellent question. I ask myself that question every once in a while. I'm definitely asked by my wife. In any case, I would say that the goal to either sell or IPO, et cetera, is not sufficient to go on at this type of pace and sometimes stress levels that we have for the last almost 15 years. And there was definitely a need to reinvent ourselves over time. I mentioned before, I alluded to this characteristic, which isn't necessarily mine, but I think in many, many ways is true for the team at large. Throw a challenge at us. That is where we thrive. And especially if we are told that this can't be done or it can't be done in time, or many have tried and failed, I felt that over the years, that is what allowed us to rejuvenate ourselves and reinvent ourselves. And every few years, I feel like we make a certain change. Sometimes it has to do with the product itself. Sometimes it has to do with the audience we serve. Sometimes it even has to do just with the way that we go about it. We look at our product from one angle and therefore create a map in one direction and then realize that we are operating in a certain ecosystem that really has other challenges and we need to address those as well. So I think the ability to reinvent yourself every once in a while is key at going at this for a very long time.
And as we mentioned, you are based in Israel, and obviously we're not going to get into huge discussions about the things that have been going on in the Middle East. But from the kind of, whether it's the fintech sector or the tech sector or the economy as a whole, there's been a huge number of challenges. Everything from having presumably a large number of your staff kind of called up to potentially negative perceptions of the company as a result of where you're located. So I'm just wondering how challenging as a company, as a CEO, running a fintech over there in Israel has been for the last 2 or 3 years.
Yeah, you are absolutely right. It has been never a dull moment, to say the least. And I not only operate out of Israel today, I grew up in Israel. And nevertheless, I can definitely say that the last 3 years from that perspective have been the most challenging and the most unpredictable. And yet, in many, many ways, this reinventing yourself and having to deal with extreme challenges. I mean, you mentioned before having team members called up or called away at the blink of an eye. And this can often happen when you are contracted to provide a certain solution and you, in our case, provide often critical infrastructure to international brands and banks, and not delivering at the right level or at the right time is not an option. And then you really have to figure out a way to get around these challenges. And I firstly have to express my gratitude to the team. I mean, the way that people step up to fill in for these voids is unprecedented and can never be taken for granted. So I think people have really stepped up to the challenge and often figured out new ways to go about things in order to bridge that gap.
And away from work, I mean, I think you got 5 children, which for most people would be more than enough. But I mean, what can Yaacov be found doing when he's not working on Jifiti?
Yeah, so that is true. Family is a huge part of my life, but I feel also very much in the culture here. Some people say that at Jifiti there's something in the water that very much encourages kind of this large families.
Wow,
You
something
will
in the water. Amazing. I'm sure there are a lot of people that would like some of that.
We may be able to bottle it and create a different branch of the company. But you will find me definitely as kind of, I think you mentioned before we began, certain individuals who have the right to infiltrate your do not disturb mode. So I have a bunch of those. And when I'm not dealing with this crisis or that crisis, I'm dealing with other types of crises. My kids also span quite a few years. My oldest is 20 and an officer, a combat officer actually in the Army, and my youngest is 7 in second grade. So the type of problems that I deal with on a daily basis from just a children or family standpoint are definitely broad. I don't know if they keep me young, but they keep me busy.
I'm sure. Okay, so look, a key part of this interview is to get your take on the future of finance. But first, we are going to take a very quick break, after which we are going to continue our conversation with the co-founder and CEO of Jifiti, Yaacov Martin. Welcome back. And don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, so now, Yaacov, let's talk about the future of finance. So, As I said, we don't really talk politics on this show, but it is impossible not to notice the, let's call them geopolitical tensions in the world and concerns about their economic impact on the global economy. Um, I asked you a little bit about kind of, any impact on inflation and interest rates. But I mean, looking at the sector as a whole, especially, I suppose, lenders and the companies that you work with, who you facilitate or you act as matchmaker, if you like, between merchants and lenders. Are they kind of adopting a cautious stance at the moment? Are they still kind of, pretty gung ho and everything's going great?
So we've definitely seen movement, meaning if you think about the early years of buy now, pay later, which is just a very small example, and probably does not represent a large portion of our portfolio, which is really focused more on longer duration, higher value loans, installment loans, revolving lines of credit for both businesses and consumers. But nevertheless, even within the last few years, we have seen of movements where at the very beginning, retail, for example, was adopting buy now, pay later methods based on the ease of use. So if it was easy to plug in and offer it to your customers, that's where they were going. And then within a certain amount of time, they noticed one moment, these services actually are not always optimally priced for my customers, and especially in an environment where interest rates are rising, and these companies obviously have to make money as well, and maybe apply fees and so on and so forth. That is when we noticed that they were looking back at traditional banks who may be able to offer them more competitive rates. So we've definitely seen that movement. But I would even venture to say, if we take a step back and we look at it more from a zoom out perspective, what we're finding to be most important in the space that we operate in is access. In other words, there are so many different alternatives today that a customer may have in theory, right? As to take a loan from this institution, this type of loan, that type of loan, this duration, that duration. And if we are able to make the most optimal product accessible at that point in time, we've already been able to improve the situation, the financial situation and outcome of the customer. So to give a very simple example, let's say in the United States where credit card debt is prevalent, if a customer has the ability to take a loan that is designed to finance their kitchen or to finance extended learning, as opposed to rolling it on a credit card where they're paying it off over time and often an interest rate that is above 25%, we've already improved the situation of this customer.
So, by virtue of innovation, they're actually getting lower interest rates than they have in the past, and therefore any increase in interest rates perhaps is not going to be noticeable. But of course, I suppose ultimately they may have less money to spend overall. But I want to change tack a little bit now because, of course, it's impossible to escape artificial intelligence and the impact that it's having or potentially going to have across industries, including, of course, the finance industry. There's a lot of talk as well about kind of, AI agents and how they're going to change everything to do with finance. I mean, what's your take on AI agents and what changes do you think banks and lenders need to make now to avoid being left behind?
Okay. AI agents in our mind is going to be the greatest leap in financial, let's call it accessibility. Imagine that once upon a time, if you were not indexed on Google, or maybe it was Alta Vista before Google, you did not exist. Today, if you employ an agent to go and find the right type of financial product for you, and again, let's take the context of loans simply because it's relatable, and you say to your agent, listen, I'm looking for a loan for this and this much, for this and this long, I would like to pay no more than this and this interest, go out, you have access, the agent that being, to my digital identity, maybe even to my repayment methods, such as my bank account. Let me know when the money is in my account so that I can go ahead and do whatever it is that I'm looking to do. You are completely oblivious as to the financial institution that the agent may or may not reach out to and may or may not contract on your behalf. And again, I know that I'm speaking about what seems to be years ahead. I don't believe it's years ahead. I believe it's closer to around the corner than years ahead. But what does that actually mean? What that means is that if you are a financial institution today that wants to participate, that agent needs to be able not only to communicate with your systems, but to apply, to sign off, and to complete the entire loan application process in this automated fashion. And therefore, if you are a bank or a financial institution that is planning on being active in a digital world and no longer expects only to be deploying off its balance sheets through walk-ins to your branch, you have to make sure that your systems are able to communicate with these agents.
And presumably they'll just have their own agents, which will talk with, consumers' agents, and the agents will get together and they'll, have a little huddle, work it all out between themselves, and no one, has to know much more about it. But obviously there will have to be guardrails and kind of, anti-money laundering and fraud protection and all those other things that are going on there. But I mean, if AI agents are were to become so integral to everything in the financial industry. I mean, what happens, for example, at the checkout moment where so much lending has historically been kind of embedded? I mean, does the consumer notice any changes? Is it going to be a better experience, a faster experience? Is the merchant going to find anything different?
So that's super interesting. There's one component that often is overlooked, and this, I think, changes everything, at least for us in the world of point-of-sale finance. The underlying logic for a merchant to engage with a financial institution and offer its loans to its customers in order to increase sales usually plays out where the merchant is actually subsidizing the interest. And that is a deal that is usually taking place one-to-one, meaning the merchant has a deal with Bank X. I'm going to give you access to my customers. Your interest rate is Y. I'm going to subsidize it so that I can offer my customers a reduced interest rate, but an increase in sales. And that will still be dependent on that juncture that has been previously negotiated and created between the merchant and the lender. And therefore, within the world of point of sale, yes, there can be tremendous automation by AI, such as AI underwriting and so on and so forth, but there is still value to the point of sale loan that has been construed by the parties. I will say that I think that with regard to personal loans, when all you're looking for is cash into your bank account, that is a place where everything becomes democratized and agnostic, because you will send your agent out and within moments, assuming you're creditworthy, you should be able to lock in a loan into your personal account.
And just another aspect of finance, which of course has been garnering a lot of attention and regulatory scrutiny now, is stable coins. I mean, what are the challenges and opportunities here that they represent? Not just in the lending space, but across finance as well. Is it going to be as revolutionary as some of its supporters are suggesting, or is this just like another rail, really?
So that's a question that I would say that I personally also have some question marks that remain, because I think that in many, many ways, what we're seeing in stablecoin is we're looking to adopt crypto, but not all the way, or we're looking to adopt crypto, but we're looking to preserve fiat in a certain way. And I can definitely understand and argue the logic in that. However, I'm also wary of predicting that all of fiat is going to move over to stablecoin the way that years ago we predicted the same would happen with other blockchain technologies. And therefore, I would say, a bit more cautious. Obviously, we are seeing movement in terms of mainstream financial institutions not only engage, but often invent stablecoins and market them. That definitely shows a trend. But again, I would not rush to say that our fiat currencies are going to disappear within the next couple of years.
Okay, well, at least that's one thing that might stay the same. So look, now it's time for our round of rapid fire questions. Are you ready?
I am.
Excellent. Okay, so I've been fiddling with my phone, as you might have noticed, getting 90 seconds on the clock. Just one-word answers is all I'm looking for. I'm going to start the clock. We'll get through as many as we can. And then when the alarm goes off, we'll just finish that question and then we will wrap things up. So without further ado, away we go. What fintech segment, in your opinion, has the biggest potential over the next 5 years?
AI.
What is the biggest pain point in your everyday financial life that you would like to see resolved?
Access.
Are bank bosses ready for the AI revolution?
No.
Are customers ready?
More so.
Do you think EU and US regulators have kept pace with all the new possibilities and behaviors we're seeing in the financial industry?
Doing better.
Have you personally ever invested in crypto?
Yes,
Are physical points of sale part of the future of finance?
absolutely.
Are bank branches part of the future of finance?
Absolutely.
On a scale of 1 to 10, 10 the most likely, 1 the least likely, how probable is it that in the next 10 years, one of the neobanks will be as profitable as a top-tier legacy bank out of 10?
10.
That central bank digital currencies, CBDCs, will be a mainstream reality in America or the EU?
10.
That you'll be able to open a crypto account at a top-tier bank?
10.
That SWIFT will still be the main tool used for transferring money around the world?
8.
That a new card or non-card based rival would emerge to challenge the likes of Visa, MasterCard, Amex?
10.
That we will see a top-tier bank or insurer bought by a fintech?
9.
Amazing. Wow, we've got 3 seconds to spare. Let's let the alarm go off. There you go. That is the end of our round of rapid fire questions. It's so rare for someone to get through all of them. So thank you for being so concise with your answers. That's the end of our rapid fire round, and unfortunately for our conversation as well. So I just want to thank you, Yaacov Martin, CEO and co-founder of Jifiti, for joining me today. Thanks so much.
Thank you.
And for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us then. In the meantime, don't forget you can subscribe to the Paris Fintech Forum YouTube channel and follow us on X at Paris Fin Forum. That's all for now. See you next time. Bye-bye.